Welcome to Industry Focus, a podcast that dives into a different sector of the stock market every day. I'm your host, Vincent Shen. It's Tuesday, September 4th. Hope everyone, at least stateside, enjoyed their holidays and long weekend. We're excited to kick off this week for Industry Focus. But on the last Consumer and Retail show, New Fool, Nick Seipel, and I talked about the upcoming Eventbrite IPO, and we plan to follow up on the discussion today with coverage of one of its major competitors, Live Nation. We're going to put that episode on ice just until next week so that I can welcome Fool.com contributor Dan Kline into the studio. Always a pleasure when you're in town, and you stop by Fool HQ, Dan.
Hey, Vince. Thanks for having me.
Really great to see you. I know that you have Coca-Cola on your mind. So they announced a big deal last week.
This was stunning.
Yes.
It's very rare we're surprised. Usually we have a bunch of ideas mapped out if something buys so-and-so, or this one, while we knew this coffee company Costa was for sale, we did not have Coca-Cola on our radar as a purchaser.
Yeah, so it's been about... I was looking through my notes. I think it's been about 2 years at least since we really looked at Coca-Cola. And today we're going to hone in on this $5 billion deal they did for Costa Coffee. And then we're also going to just look at how the company has transformed in the past few years to close out. But I'm going to let you start things off so to provide the context to our listeners. Coca-Cola spending with the conversion $5.1 billion. And this is going to be a push for them into coffee, hot beverages, also brick and mortar, which is something we're definitely going to talk about because that's a first for Coke. But what does the deal look like exactly?
So this is basically Coca-Cola saying, what areas of the beverage market, the non-alcoholic beverage market, do we not serve?
Yeah.
And coffee was a glaring hole. So they would go into a business, let's call it a restaurant. And they would say to the restaurant, we can serve you Coca-Cola products. And we could serve you energy drinks, and we could serve you iced teas, and whatever your mix is, we can meet it. And they go, oh, great, what's your coffee platform? And they say, we don't have a coffee platform. This lets them take a well-known brand in parts of the world, and they can bring that brand to the U.S., especially in situations where the brand isn't the selling point, where it's really being able to meet the need. You know, a restaurant, generally, they might tell you they brew Starbucks coffee, but that's not usually a selling point in a nice steakhouse. It just says they have cappuccinos. This allows Coca-Cola to add that business. And that's a huge opportunity for the company because it already has relationships across retail and restaurant and all these other spaces. It also puts Coca-Cola into the retail business, as you mentioned, which it's about 3,800 stores, with about 60% of them in England, in the United Kingdom.
Yeah, and I'll stop you there because we have a lot to talk about with that brick and mortar operation. But I just want to add some context for what you. It's a really good point in terms of they have this big opening with hot beverages essentially that the company doesn't really address quite as much, especially when it comes to coffee. And we're looking at a category when you look at global coffee and tea that's particularly strong. That category has seen some of the stronger growth rates. I think 6% last year, and this is a $500 billion market at least.
And it's a hedge against declining soda sales. Mm-hmm. Coke has done some interesting things to shore up like the Diet Coke business, the skinny cans, the different flavors. But long-term trend says that market will probably continue to get smaller as, healthier choices. Coffee is a growth market. It just makes sense.
Yeah. Addressable market for the company and the presentation materials to provide for this deal takes it from something like $800 billion to $1.5 trillion. So it's massive. And I'll stress that at the moment, Coke only operates in the ready-to-drink segment when it comes to coffee. And within that, it only has about 15% market share. So if you look at the broad category, Coca-Cola is looking to jump essentially from a 2% market share to the additional opportunities that we'll talk about with Costa Coffee. And the last thing I'll mention, or that I wanted to mention in terms of the seller, an interesting company. It's Whitbread. They're an English company. They're basically parting with this entire division to focus on their hotel and restaurant businesses. Crazy thing, we talk about Coca-Cola being this historic company, at least for the United States, founded, I think, in 1892 or something like that. I saw that Whitbread was founded in 1742. So it always puts things in perspective, being such a much older company, and tends to be the case for a lot of these European businesses. But there's going to be the standard shareholder and regulatory approvals that are required for a deal like this. Coca-Cola and Whitbread, they expect the deal to close in the first half of 2019, and Coke's going to fund the transaction from the $20 billion of cash that they have on hand. Before we look more at the strategy, though, for how Coke is going to essentially leverage the assets and the brand here, I'll talk a little bit more specifically in terms of what the company's getting. So let's get into the brick and mortar apparatus that they have here.
So there's really 4 pillars to the business.
Sure.
There is a huge vending machine business, 8,200 Costa Express terminals, which we were joking about this upstairs, that in the United States, coffee vending is like an old school, gross hot chocolate and soup come out of the same. This is a very high tech, like you would see it like a tech company. Like at Microsoft, there are coffee vending machines where you could dial up exactly what you want.
Well, and a good analogy for within Coca-Cola, they have these freestyle vending machines, right? This is like the coffee equivalent.
It's very much
right?
a coffee version of the freestyle machine, where you get sort of the barista-led flavors, and you do see these at some convenience stores, but you could get the real barista experience from a machine where you're pushing the buttons. That is a much bigger thing in the rest of the world than it is in the United States, but it is a huge opportunity. They're also getting the coffee bean business, which is literally the ability to go to a restaurant and sell them not ready to drink beverages. You're buying the beans, you're brewing them. Maybe you're intentionally differentiating yourself from having Starbucks or one of the other brands. They're also getting 3,800 retail stores in 32 countries. 32 countries. And about half of those are franchised and half of those are company owned. They are also getting a huge loyalty program, which is actually something Coke also doesn't have any real experience in, because you're generally not buying Coca-Cola from Coke. There's no program where if I drink a 12-pack every day, I get, I don't know, free stuffed teddy bear or whatever.
And they sometimes have those contests for, you look under the cap and
they generally have to do that stuff with their partners.
Yes,
so
exactly.
Now they'll have the ability to not just, have a direct relationship with a certain percentage of consumers. They also have 3,800 stores that they can test products in, or that they can, run a promotion or see if people want, different things. So it's a really different business for them. But mostly, they're taking on about 16,000 employees, and they're just getting entry to something that they didn't do, that they have all the apparatus in place to sell.
Yeah. So these 3,800 or so locations, you mentioned 32 countries. They're focused in Europe, Africa, the Middle East, and Asia. The biggest markets are...
It's about 60% in the United Kingdom.
Definitely the UK, and then also in China. And keep in mind that Costa, both for you and I, not a brand that we're as familiar with, but in the UK, it is the number one coffee brand. They have 35% market share when it comes to coffee houses there. So this is just a name that hasn't quite made it across the US.
And one of the things that was talked about at the press conference on this, or the media call, is that this is a brand that has already proven it can be a winner. So this isn't like some underdog. Coke isn't buying a brand no one's ever heard of and trying to make it something.
And that's something management said they specifically wanted to do. They wanted to get the leader in this space within this market and to branch it out rather than try and go in and organically build up something from the ground level. And that will speak to how that's been their strategy really broadly for the company in terms of the brands that they're really focusing on. So you mentioned the Express system, and I'll add that these vending machines, 8,200 units out in the market, at least within the UK, they generate about 20% of revenue for the business. So pretty significant. And overall, I want to get into some financials for Costa Coffee. Revenue for the business came in at $1.7 billion with about $312 million in EBITDA. And the top line has grown 12.5% annually over the past 4 years. So, and almost 9 out of every $10 of revenue for 2018 came from the UK, where it, again, has by far the most stores and those express machines. So next up, I want to get into more detail talking about what Coke can do with this coffee business and how investors should think about the company more broadly going forward. So remember that we've talked a little bit about this so far. Coca-Cola tapping into the retail footprint, tapping into the Costa Express vending machine system, the distribution of these roast and ground beans into restaurants and cafes where Coca-Cola products are already going, like you mentioned, and ready to drink beverages. There's more to that.
It's really, you have to almost look at the United States and the existing Costa markets and markets that have some Costa knowledge separately. Because in the U.S., Coke has said, we're not going to open a bunch of retail stores. There's a saturation point with Starbucks and other players there. What Coke can do is they can go to every company that they already sell Coca-Cola products to and say, would you like our coffee too? It'll be cheaper for you and easier for you than having whoever you use now.
Sure.
So that's an immediate advantage. It can also go to every convenience store where it has Freestyle, or Freestyle is in a lot of restaurants. Blaze Pizza, for example, has Freestyle, and a coffee machine would be very logical there. So they can go to them and say, hey, do you want this? This becomes a very easy add-on sale. And Coke also has the ability to do it in a way that benefits your business. I used to run a giant retail store, and we carried Polar soda instead of Coke because Polar gave me the cooler as long as I signed a 2-year contract. So the big stand-up machine,
Yes.
The local Coke guy wanted $1,000 or whatever it is up front. I paid for it either way. It was just a question of, did I pay for it over X amount of orders as, a slightly higher price, or did I pay for it up front? Coke has the ability to go to every Wawa and say, which have Coke Freestyle machines, and say, hey, put in our coffee machine. Mm-hmm. So that part of the business in the U.S. can be very quick growth. In the rest of the world, where they already have some market knowledge, they can do that part too, and they could also ramp up the expansion and the adding shops and adding kiosks, especially where the kiosk business is understood in Europe, and in the U.S., coffee kiosks are not yet a thing.
Mm-hmm. And I know that management has wanted people to see that Costa not as the single brand, but as this platform, right? Because of the 4 pillars that you've talked about. But ultimately, when it comes down to, you're essentially powering Costa with the scale and the distribution expertise that Coca-Cola very much has. And then with the retail storefronts too, in terms of what we were talking about before the show, newer products, experimentation, you have this direct feedback now from the storefronts, from customers.
It's the Starbucks model. Mm-hmm. So Starbucks buys Teavana or their juice brand, which is escaping my memory what the name of it is. But you go into a Starbucks and they figured out which Teavana teas they sell packaged, which ones they sell fresh made, and they tested all of that, generally starting in Seattle and moving to Chicago for the US, and then they roll it all out. So there's no mystery to them when they put a product into stores as to how well it's going to sell for the most part. Coke will now be able to do that. They'll also be able to gauge things like, if I give out free samples of this, do people like it? That's really valuable market research to be able to say, you know what, the UK does not like cherry iced tea or whatever it happens to be on the level this market does. So they can really now have this consumer lab, and it's important they're keeping all of the retail management. So this is not Coke going, we've never done this, let's do it. No, they are buying a ready-made company, and they are going to be involved, but they're going to let the existing people be in charge.
Yeah, they stress that this is a coffee strategy, not a retail strategy, which allows the management on the Costa side to continue kind of forging their own path there, and essentially Coca-Cola's management doesn't have to answer the tough questions of, you guys have zero retail experience. What are you going to do? There's definitely, it makes sense there for them to maintain some of that leadership.
And there's also a brand strategy here in the U.S. Coke is not going to go to, Kroger's and say, let's put Costa on the shelf next to Starbucks, Dunkin' Donuts, McDonald's, all the ready to drink coffee, because you don't know what it is. So what will likely happen first is you'll see Costa in restaurants, in other places where you don't have a choice, where Coke has sort of done the strong arming. Mm-hmm. Then when you start to know the brand, it will make sense to roll it out in ready-to-drink packaging. And you've tried it, you're familiar with it, maybe you like it better than you like the packaged Starbucks. So this becomes really sort of a multi-year, multi-pronged strategy.
Yeah, that's great. It's kind of a great description of how they're going to approach this gradual process. And the company actually lays out an idea. They kind of give you an idea of what their attack plan is. First, they want to build the Costa brand, right? And they're thinking about that through their retail locations and also taking advantage of that, the pretty large loyalty program base. They have 5.4 million members. Start working off of that. And then second, they're going to start integrating Costa into Coca-Cola's very large distribution network. And again, they're going to offer more products, like you've said, to restaurants, cafes, whatever it may be. And then third, once they've kind of made some progress with that. They want to start thinking about launching Costa in ready-to-drink form and then in at-home products. And, beyond that, the company can really start with cold or hot ready-to-drink coffee, and then they can branch into these other categories for at-home products. And there's also related products too, like hot tea and cocoa. So a lot of paths that the company can take.
I was actually really surprised how much they talked about hot ready-to-drink. Mm-hmm. Hot ready-to-drink isn't a category. It's a category in like Japan and a couple of places that have sort of innovative beverage technology. But think about it. We don't have those cans you open and it's hot. So that's actually something they talked about having to innovate and having to create sort of new ways. And that's a category that who knows what the potential is. Mm-hmm. The vending machine potential of getting a self-heating coffee could be enormous.
Sure. So, this optionality means that the company ultimately has to and will tailor its approach by market. We talked about how in the U.S. they don't need these Costa Coffee stores. There's plenty of.
I think they said they'll open a few,
there. Maybe kind of to get the brand out there as kind of a flagship thing. But whereas in Asia, where the coffee culture is still very much developing, there's definitely the potential for them to open more stores in that market. And then within that context, kind of more on the operations side, I'll just mention that Costa has a new roasting facility in the UK. Provides almost all the coffee
everything
that
except
the
India
sells, except for some of their Indian market, and there's capacity to expand that under Coca-Cola's management. So moving on, last comments that I'll mention for the deal, unless you have something to add, is around the valuation. So in terms of the process for how this deal came together, I've seen both management teams mention that it was a pretty quick process, and the price tag paid has garnered a little bit of attention during the investor call, 16 times EBITDA. I compare that to another deal recently in the beverage space, which is PepsiCo, because they recently took over Sodastream. Some people have complained. Some investors have been unhappy because that was this huge premium. They bought it at some of the highest price that Sodastream's been trading at, almost 25 times EBITDA. So what we're seeing here, definitely some expensive deals in the beverage industry in terms of the opportunities that the giants are going after.
I think it's because there's some sharks out there right now. I mean, we've done whole shows on JAB or JAB or whoever you want to call them,
sure,
which is a holding company that owns a billion coffee brands. Some you've heard of, some you haven't. They own Panera Bread. They own some equity in what used to be Keurig, that's now Keurig and Dr. Pepper. So they were probably a player here. We don't know that, but even if they were just sort of sniffing, it's very easy to go to Coke and say, well, if you don't pay our premium, we don't want to sell to these guys, but they're buying. And it's very likely that was out there.
Yeah. All right. So just talking about Coca-Cola more broadly now. So just providing some context for how this deal fits into their strategy going forward. There's been a lot of changes with the company. So ultimately you see Coke pursuing this capital light model where they can be the puppet master, pulling the string on brand management and marketing, and they've tried to move away from having to deal as much in terms of the operations with manufacturing and bottling because of the heavy capital expenditures that requires, and a lot of the other expenses that come with that business. So, for example, in 2017, Coke completed the refranchising efforts of its U.S. bottling operations. There are also some big efforts in shoring up the bottling operations in big markets like China and Japan. And in addition to those refranchising efforts, there's also some big changes in terms of the product portfolio to address health concerns, right? Sugar content. They've killed a lot of what they call zombie brands that are just not performing well. And with that, hundreds of SKUs in certain markets. There's been new leadership with James Quincy as the CEO. They also have a chief growth officer that they've added. So a lot of shifts there as well. And what that ultimately means if you're looking at Coca-Cola as an investor is, their top line is shrinking, no doubt about it, because of these efforts. But at the same time, with this kind of asset-light business model, their profitability is getting stronger and stronger. And so there's a give and take there. And the way the company sees its kind of product brand strategy is to become the number one or number two leader by market or product, because that brings in the most profitability and the best returns for the company. I have a quote from Quincy, the CEO, where he basically says, "It's better to be the leader in half of the world than number 3 in all of the world from a scale and profitability point of view." This again speaks to why they picked up Costa, right?
It's a big diss to RC Cola.
Exactly. So, this latest deal with Costa, it makes sense that they have a dominant name in its home UK market and something that's very strong in Europe, and it's branching out from there and taking that strength and molding it into their system.
And it's a brand that could plausibly become the number 2 in the United States in some of these categories. It is not going to be the number 2 coffee house. It could absolutely be the number 1 or number 2 restaurant brand. It could become the number 1 or number 2 convenience store brand.
Ready to drink brand, yeah.
Ready to drink, I think, is harder because that is much more, if you're looking at labels, it is about brand name. If you want a nice hot cappuccino and they put this glorious looking machine in, you're not probably going to think who made the beans. You're going to think, I want a barista made coffee and this is the closest I can get. I worry about their ability for a long time to put a Costa bottle next to a Starbucks and a McDonald's. This is an area, you saw the Starbucks Nestle deal, which is all about ready to drink and expanding. Sure. This is a space that everybody is targeting. Dunkin' Donuts has rapidly, and those are very big names. Costa has proven it can be a name, but it's going to take a while in the U.S. until it is a name.
Yeah. So the last thing is, new brand, and with the retail storefronts, a big part of that too is just the ability to experiment. You mentioned some examples from Starbucks. The Chief Growth Officer position, I think that's really interesting that he talks about experimentation during I think it was a June presentation. And he said that as of the first quarter of 2018, Coca-Cola has increased its number of experiments 38%, with the volume from those products up 32%. Coffee is basically this whole new playground now for them to see what works, what doesn't. And again, I think this is a really interesting deal for Coca-Cola, just because you think about their dominance in these non-alcoholic beverages, right? It does make sense. You've essentially opened up the entire additional market that coffee and hot beverages provide.
And coffee's also become a bit like craft beer. I'm not sure how big a coffee guy you are, but I'm a pretty big coffee guy. Mm-hmm. If a new coffee house opens up in my neighborhood, I am going to check it out, and I'm going to try 3 or 4 different things before I make a decision on whether that becomes part of my rotation. There's a certain anti-Starbucks where, not that you don't like Starbucks, but you've been there 1,000 times. So when they're in a market, when they're opening in China where there's thousands of Starbucks and a Costa comes in, your coffee aficionado is going to say, try it in a way that doesn't work necessarily in fast food or other places where just because it's new, so the product is good and it's proven that people like it based on, that's going to give it sort of an ability to grow in markets where they don't have to supplant someone. They just have to take a piece of the business. So maybe there'll be a strong number 2 a lot of places, and that doesn't exist. There's, the U.S. has a whole bunch. There's a lot of fragmentation across the rest of the world.
Yeah, definitely. And that's something to speak to for coffee. I'll leave listeners then last kind of comment for this deal, and the potential that you always have to remember when you're dealing with a company of this scale and experience when it comes to beverages. There's a reason why it is the market leader. Coca-Cola has their distribution system. They get about 2 billion drinks into the hands of customers in 200 countries every single day. Now you're just adding this new, what they consider a platform to the mix. And I'm really excited to kind of see what not only Coca-Cola is going to do with this, but I'm kind of excited with the other deal like PepsiCo and Sodastream, see how that works out. We're definitely going to follow up on this. It's been too long since we've talked about kind of the majors in beverages. Any last thoughts from you, Dan?
I don't know. Are we going for coffee?
I'm down to go for coffee right now. But fools, thank you for listening. Dan, thanks for being here.
Thanks for having me.
People in the program may own companies discussed in the show, and the Motley Fool may have formal recommendations for or against any stocks mentioned. So don't buy or sell anything based on what you hear during the program. Fool on.